Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, November 1st. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. Please do your own due diligence. It's your money, it's your responsibility. Okay, lots of exciting news this week, especially in the nuclear power industry. Uh, we had the big announcement. U.S. government and Westinghouse. Westinghouse, of course, is the former bankrupt general contractor that builds, has the AP1000 design. It got bought by a consortium of Brookfield Asset and Cameco, the uranium fuel producer. And so it's, slowly but surely just recently got some, more contracts in the Czech Republic. It's ramping up its business. A lot of people thought this was a dumb idea that Cameco would do this. Nuclear power was dead, right? It's turning out to be a really good deal. So, anyways, this is something that I had been hoping for, that I had been talking about for years on this channel, the reemergence of nuclear power as a growth industry. That's happening now, a focus on it, a commitment to it. What we said what needed to happen was streamline of design, streamline of the regulatory process. Don't try to build one-offs. I mean, during the last build out of the nuclear power industry in the 70s and early 80s, just about every reactor was different, which leads to higher costs. So I think this is a better idea. You get this down. Okay, this is the design. This is who we're going to go with. We're going to partner with these people. We're going to give guarantees. We're going to expedite and streamline permitting. This is all the things, public-private partnership. If the thing works out, the U.S. government's making an investment, it'll get a return. A lot of people will say that this is industrial policy, and they're again, I'm for it. It's just that simple. It's similar to building highways. You have to have the backing of the federal government, and hopefully they won't get in there and do like during the Green New Deal when you had all these onus requirements put on companies about DEI and starting apprenticeship programs and all this kind of nonsense. Yes, this is going to be an endeavor. We don't have the skilled trades. We're going to need ramping up of that. The supply chain needs to get ramped up to build these things. So that this is why you need this big commitment, this big surge into it to give confidence to the people in the industry to say, okay, this isn't just going to be a one-off. This is going to be a commitment. There's going to be many reactors built, and so we can commit many years and many dollars to creating the supply chain, to hiring the requisite engineers, to getting the factory floors ramped up, what have you. And so I think this is a big deal. I think there's probably more to come. I think that this could define the Trump presidency. This is what the president is really good at. Instead of going around the world and thumping on different countries and foreign policy and all this nonsense, focus on this kind of stuff. This is what would bring America back. This type of thing, a big endeavor, engineering, construction, way above anything that people can think is possible, like building out this highway system, like the space program. Things give people a vision, set the bar high. So we'll see, but this is a good start. This is very exciting. This is something I've been calling for years. It's finally happening. And so I think this is just the beginning of what we're going to see. This is, again, people, as we go through this, will be like, well, nothing's happening until 2030. Yeah, it's going to take time. These are long lead time projects. It's an industry that's been ignored for 30 or 40 years or longer. Well, 40 years was the tail end of the last cycle of build outs. And, since then, we've had two reactors built that were way over budget. And that's because these are complicated things. And if you don't have a streamlined process, it raises the cost. So MIT did a study. We'll show you that here in a minute, and shows that the more reactors you build, obviously efficiencies kick in and cost goes down and time of construction goes down. So we'll show you that in here in a minute. But let's focus on the deal here. The U.S. government has signed an $80 billion deal with Westinghouse Electric to build large-scale nuclear reactors to support growing electricity demand from artificial intelligence. The partnership involves Westinghouse, Brookfield Asset Management, a subsidiary of Canada-based investment firm Brookfield, and Canadian uranium producer Cameco Corp. Westinghouse announced in July it plans to open 10 new plants in the U.S., with construction starting in 2030. To date, there are only two Westinghouse AP1000 reactors operating in the U.S., Units 3 and 4 at Plant Vogtle in Georgia. So not only is that in the news, but if you recall, back in the late aughts, uh, or in the aughts, in South Carolina, Santee Cooper was building the summer reactor project. Uh, they stopped building it. They canceled it mid-construction because of bankruptcy and cost overruns with Westinghouse. That's being brought back now. It shows you this is coming back. So it says the board of directors of South Carolina's state-owned utility, Santee Cooper, voted today to approve the proposal from Brookfield Asset Management to complete two new AP1000 power reactors at the VC Summer site in Jenkinsville, South Carolina. Brookfield Asset Management won the bid to restart construction on the Summer 2 and 3 units. The proposal will not require funding from ratepayers and will bring an additional 2,200 megawatts to the region. This effort would be a restart of a failed project that was started in 2013 by Santee Cooper and the now defunct South Carolina Electric and Gas Company. Due to delays and cost overruns costing the utilities and ratepayers $9 billion, it was canceled in 2017. It also led to legal actions taken on Westinghouse and now defunct SCANA executives over defrauding consumers about the timeline and cost of the project. So this is the risk, right? That we don't get this right again and we have these cost overruns. But I think with I think they're approaching it in the right manner, which is we're not going to have all these different designs. We're going to streamline the NRC. We're going to, you know, focus on efficiencies. Now, I will say, well, I'm not going to say it. I have dealt with Brookfield before on renewable projects, and they didn't go well. And well, that's a whole nother story. Hopefully, that was just a one-off. At least one project that I was on that they were the money people on, but we'll see what happens. So, of course, Cameco stock price has liked the news. There were many people that when Cameco bought 49% of this Westinghouse deal and Brookfield got the 51%, that said, this is stupid. Why are you doing this? Nuclear power is dead. It's not going to amount to anything. And yet Westinghouse has already signed dealing with some projects, I believe, over in Czech Republic. I haven't really deep dived it. They've got this deal now. They've got the full force of the U.S. government behind them. And so, I think this is going to end up working out pretty good for Cameco in the long run. And obviously, the market liked the news. Would I rush out and buy Cameco stock on Monday? No, I wouldn't. It's probably overvalued. But a lot of people thought Cameco, you could have bought this thing earlier this year for $40 a share, and it's been a three bagger. So I've told people this should be a lesson. When an industry that's been out of favor uh, comes back into favor and the big money wants to come in, they don't go to junior companies. They go to where they can get liquidity, the large market caps, the 800-pound gorillas in the room. They don't go out and buy, XYZ Moose Pasture Uranium Company in Saskatchewan. They got to go because this is where the liquidity is. This is the 800-pound gorilla. That's where it starts. Eventually, the money does trickle down, but this is why Cameco can triple in 1 year just on the change in perception and the change in the attitude towards nuclear because of a new administration coming in. The president came in, new administration here, said they were pro-nuclear, started initiating deals and doing things, and you see what has happened. Now, that's not the only reason. The uranium market has, you know, gotten better, but the news just keeps getting better and better. And so it's reflected the money. So somebody, a portfolio manager says, okay, I want some nuclear exposure. Okay, just go out and buy Cameco. That's what they do. So they can show it in the portfolio. Yep, see, I got Cameco. We know what we're doing. This should be a lesson for like people that want to invest in oil and other things. When the perception, when the zeitgeist, when the views towards an industry go from negative to slightly less negative or slightly positive, and the money starts coming in, it goes into the big money goes into the large cap stocks first. I created like a mini oil ETF in the Actionable Intelligence Alert newsletter, and it consists of some large capitalization stocks, best of the best. If something's completely out of favor and at, in my view, historical lows, of course I want the best of the best. I can buy it for cheap. Why go out and buy speculative issues when I can buy the crown jewels for giveaway prices? This is what can happen. And somebody said, well, there's no asymmetry there. Well, do you think there was asymmetry in Cameco? It it did a triple basically in less than a year. So this is what can happen when perception changes towards an industry or towards a company. Even something that's probably was already overvalued down here. Things can become more overvalued if you get in the short term, as I've said before, sentiment and liquidity is what drives prices. In the long term, yes, fundamentals are what drive things over several years. In 3, 6 months, a year and a half, it's sentiment and liquidity. Liquidity's coming in, and if sentiment turns positive, this is what can happen. If you look at Cameco deep dive it, they're having issues at some of their mines, and they're going to have to go into the spot market and buy a lot of uranium. So that could be a possible downfall, but yet the stock still almost tripled because of perception. So more good news. So there's a reactor that's shut down in Iowa. Iowa has one reactor. It's called Duane Arnold Energy Center in Iowa, and it's being brought back online by NextEra. This is a blog from a blog post by Google. That's why it says we, but it says, anyways, NextEra will bring Iowa's only nuclear reactor plant back to life. Today, we announced a collaboration with NextEra Energy to accelerate nuclear deployment across the U.S., including the restart of the Duane Arnold Energy Center in Iowa. We expect Duane Arnold to be back online in early 2029, and the plant will provide more than 600 megawatts of clean, safe, always-on nuclear energy to the regional grid. This will support our growing cloud and AI infrastructure in Iowa and bring thousands of jobs and substantial economic benefits to the state. Through this agreement, we're enabling the investment to restart the plant and covering costs for the production of energy from Duane Arnold. The other reason I think that I like a lot of these restarts is that it allows you to expand on the current footprint. It will make it easier when Google and NextEra say, hey, this has been so successful, we want to build another reactor on our land there at the Duane Arnold Energy Center, reactor 2 or whatever. And so that's why I think it's also positive to look at the restarts in that type of context, that I think even down the line, it's going to allow for even more expansions. So Wood Mackenzie comes out with a report last week, U.S. nuclear generation to grow 27% post 2035 as data centers fuel power demand. U.S. nuclear power generation is set to rise, analysts at Wood Mackenzie said, as surging demand driven by data centers strains grids across the country, and a wave of tech companies sign deals to source power from the zero carbon resource. Quote, technology companies are now becoming energy providers by necessity to meet this growing demand. especially in the US, where nuclear power is emerging as a preferred solution. But many of these will take time to complete construction. Wood Mackenzie expects U.S. nuclear generation will remain steady until 2035 and then increase 27% through 2060. So a couple things here that I want to point out. Uh, yes, nuclear power is long lead time. What happens in the interim? Well, natural gas, which we've been talking about. Try to get yourself a large frame gas turbine. You might get it in 28 or 29, 30. They're sold out. GE Verona's sold out. Siemens is sold out. They're all sold out. Uh, Look at gas pipeline providers. You listen to their conference calls, Energy Transfer Partners, One Oak. They have strategies, and they've been getting inquiries from people saying, hey, we want to run a tap off this pipeline near this energy plant we want to build for gas turbines. It's not just one-offs. There's dozens and dozens of these requests. Okay. Um, Not only is that happening, but the grid needs to be updated. Okay, this is why this is so important and so explosive and so possibly changing for the economy, going to this more higher tech, electricity production, upgrading the grid. Notice you don't hear much discussion around renewables. Why is that? Because they can't get the job done. Okay. Now, could this all change if Newsom wins in 2028? Well, it'll really be a lot of this will be baked in the cake, and I think they'll just co-opt it, probably bring renewables back. Who knows? But I think this is going to be such a large investment being made and being set in motion that you're not going to be able to turn it off. Okay. Now, there is a risk here and danger. It's not all smooth sailing. The history of building nuclear reactors in the U.S. Uh, has been cost overruns and longer project times being drawn out to the right. We'll see if they can get that under control. That will be the challenge. And the other challenge is the labor, the craft people, the engineering talent, all of that, the supply chain, all basically has to be rebuilt from ground zero. But this is part of the opportunity in my view. Okay. This is what's, I've said this before, this is going to be the challenge. We're already seeing it even with the miners. Cameco has talked about this in their own mines, getting skilled trades to work in the mine. Okay. Where do we get these people? Mike Rowe has talked about this. We don't have enough tradespeople. Okay. If you want to have a middle class or upper middle class lifestyle and you're a young person, you should consider going into the trades because there's not enough people. Somebody approached him from Electric Boat and said, hey, the United States has this new submarine program, but we need 100,000 pipe fitters, welders, and electricians. We don't have them. Can you help us? And so I think, you have to kind of know what's going on in the world and adapt. Going to college, getting some podunk degree, and then becoming a, you know, customer man manager in a tech company and making 100 grand a year and getting free lattes, that's over with. Okay. But if you're a welder, if you're a electrician, if you're a instrumentation person, I've said this before. Somebody said to me, what would you get into, John? I would go to school to become a substation instrument person. Okay. They're so desperate to get these guys. They make six figures. Yeah, you're going to be on the road. So if you're a young man, you work 5, 6, 7 years on the road, making well over a hundo a year. Okay. Push, push, push. You're getting big per diem money. Okay. You work hard and then you're set. You're set and you invest the money properly. You just live off the per diem and bank your salary. If you don't go out and buy big trucks and houses and all, just bank your money. You're set for life. Then you can peel back and just, work for a local utility for, 40 bucks an hour and just do your 40 hours a week. You're set. This whole thing needs to be started basically from the ground up. That's why it's going to take money and time. So this kind of didn't get as much play, but Japanese nuclear investment. You know, President Trump was in Asia recently, and he visited with the new Japanese Prime Minister. She's very pro-nuclear, by the way. And this is just a snippet from the fact sheet. This is the joint fact sheet for U.S. Japan investment. This is at the occasion of President Trump's visit to Japan. The government of Japan and the government of the United States of America welcome the interest from companies of both countries who launch projects in the areas below. So it says like Westinghouse construction of AP1000 nuclear reactors and small modular reactors, considering involvement of Japanese suppliers and operators such as Mitsubishi Heavy Industries, Toshiba, and IHI, up to $100 billion. Then you see GE Verona, Hitachi, construction of SMRs, considering involvement of Japanese companies such as Hitachi, GE Verona, Vernova, up to $100 billion. So big money is flowing into this, guys. Okay? Big money is flowing into this. It's back. Nuclear is back. So here's some new data that came out from the World Nuclear Association, which I think we need to look at. Right now, you have 70 reactors are currently under construction across the world. About 110 further reactors are planned. Most reactors under construction or planned are in Asia. And in Asia, most of those are in China. New plants coming online in recent years have largely been balanced by old plants being retired. Over the past 20 years, 106 reactors were retired as 102 started production. Yes, but the overall generation capacity has went up because a lot of the older reactors were in the 600 megawatt. Now you're bringing on these 1,000, 1,100, 1,200 megawatt reactors to replace them. So overall generation capacity has increased. I put this in here. That's what the World Nuclear Association says. So definitely in a growth industry, growth upward track, right? And I put this in here. I'm only aware, maybe I'm wrong, but I'm only aware of one new greenfield uranium mine under construction, and that's in Niger. And it's interesting, that particular uranium mine cannot find a loan from anybody to help them. So they're issuing equity to fund the mine construction and can't find a JV partner. Now, probably because it's Niger, I don't know. It's they had a coup there, they kicked the French out. Maybe the political risk is too high. But this is the what you're going to be. This is why, you know, increased demand for uranium because of all these new reactor builds, which is very exciting. Where is the uranium coming from? Now, again, I've said this many times before, and I'll say it again. Uranium is not scarce. Okay, we know where it's at. It can be mined. The problem is that no one's invested in new mines in years and years and years. And so we've been living off the previous investments in the industry. And this is becoming a problem now. We've seen the struggles, as I've mentioned many times before, the struggles of these companies trying to bring these brownfield projects back online and how most of them, all of them that I know of have struggled. Okay. Hopefully they'll get that worked out, but even that won't be sufficient. And so billions of dollars of capital is going to have to come in to build new mines. We just don't see it happening. And so that, to my mind, is going to lead to a higher uranium price until the uranium price becomes so high that the investment comes because people can't resist investing. So the profit potential is so high, the incentive is so high that capital will get committed. And so I added this last blurb here where I asked the question, where will all the uranium come from? And I think I don't have any knowledge of this. I'm not saying it's going to happen next week, but I think it's pretty certain with the emphasis on critical materials that this particular uh, administration and government in power that's currently in power has towards critical materials. I mean, they just had to cut a 1-year deal with China for rare earths because we don't have, trying to get some breathing room around rare earths, not to mention all these other metals like tungsten and all these other things, copper. Okay. what would it do to the uranium price? And I think this is coming because if you're going to build all these reactors, I think it's coming because I think that the people that are behind all of this in the administration understand this and know this, that they understand there's quite a bit of uranium in the United States. They want this centralized. Why not create a strategic uranium reserve? We had this before, and it was sold off when uranium prices collapsed, and you know the short-sighted government officials sold at the low. And so I can see a scenario where they say, just like they did with rare earths, we're going to give you a floor price. What if they came out and said, look, we want 10 million pounds of uranium and we're willing to pay 100 and the floor price is $125 a pound, okay? Or something like that. Or enough, this is what the Chinese do. They have, years and years and years of uranium fuel for their reactors. They're not stupid. They're not going to spend billions and billions of dollars building reactors and then rely on, Joe Schmo Uranium Company Jr. to deliver, 1 million pounds a year and they're struggling. No, 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 no. We're going to go out and buy this uranium. They even bought a high cost mine in Africa because cost doesn't matter to them for the fuel. It's keeping the reactors running and having that security, energy security, not being beholden to other people. They have seen what has happened to Russia and other countries that get sanctioned. And if the United States and China are on a geopolitical collision course, the United States is in that boat right now. You have 20% of your base load electricity in the United States. 20% of your base load is currently nuclear in the US. And we produced 400,000 pounds of uranium last year and can't enrich enough fuel domestically for reactors. That's just silly. Now that can be fixed with a lot of money and time, and that's what I think is going to happen. And I think there's going to be opportunities there also. But I sincerely think that we're going to see the announcement by this administration of a strategic uranium reserve, and I think it's going to rock the uranium market. Okay, it's going to launch it. Yeah. So I don't have any particular news. I just suspect that that's what's going to happen. If you're going to spend this kind of money and build all these reactors, they know that how much uranium is required. They know we don't have enough uranium right now. They understand the situation. They know that all that uranium in Kazakhstan and these other places is going to be heading to the east. We have quite a bit of uranium still in the US to be exploited, so why not incentivize these companies and say, okay, to ramp this industry up, we'll offer you this, and it creates tremendous potential profit margins. And so you'll see the investment come in, real money will come into it. They won't be just scraping by. So that's what I think will inevitably happen. I don't know if it happens next week or a year or 2 years, but I think it's going to happen. I mean, it just makes sense. So this is a chart. It's kind of a little bit blurry because I had to blow it up, but this is from the MIT report that recently came out. It basically shows you this is the cost per kilowatt in 2024 dollars to build nuclear power, and you see this is the number of reactors, and you see that blue line as you build more reactors, cost comes down. And so if you build, up to 10 reactors, the price comes down by, you know, 60 or 70% from 15,000 a kilowatt hour to, less than 6,000. And the time, here's over here, this is construction duration in months. If you just build a couple reactors, you're looking at 130 months. That's almost 10 years. But as you build more reactors, that comes down quite a bit also, down to 80 months build time. So as you build more reactors, cost comes down, time of build goes down. That's just the built-in efficiencies, and you get better and better as you learn from prior mistakes. You say, okay, we'll incorporate that into the next, or we'll change the manufacturing line or whatever, the supply chain, what have you, naturally happens. But if you just build one off, then you're having to relearn the same lessons over and over. That's why I think this is so important, kicking this off in such a big manner and why it requires this public-private partnership because now the other thing that I would add in something that a lot of people aren't thinking about, Google, Meta, all these companies get involved in this, Google, Alphabet, whatever you want to call it, getting involved at Dwayne Arnold with NextEra, now you're in the utility business, the software business and the businesses that they're in with search and things like that. Those are high margin businesses. They don't have high fixed costs and plant and equipment. Okay. Now you're getting involved as becoming basically a energy utility. What is that going to do to margins? That's been one of the arguments I've been making over time that yes, they're making all these investments and they're saying all these things, but these are not high margin businesses. They're required to enable their high margin business, which they even admit they're not sure how they're going to make a profit on. So that's something to keep in mind also. Okay. And then again, who's going to build all the infrastructure outside the plant to carry all this current and all this energy because it's dilapidated and been left in neglect. So I think that could be another thing that the government's going to have to get involved with. And I think this is just, it's a big Herculean task because it's been ignored. Infrastructure has been ignored for so long. And I just wish the president would come out and just give these grand speeches and go to these places instead of screwing around with Gaza, Ukraine, and EU, and the rest of this nonsense that doesn't matter to the actual people here in the United States. Go around, put that hard hat on, shake those guys' hands, give speeches in front of it, stuff like that. That's what I would be doing. This is what we're going to do. I'd go to Dwayne Arnold. I'd be walking through with the NextEra executives through the plant for this is tremendous. This is awesome. This is what we're going to do. And now it's a strategic uranium. Go to the uranium mines. Hey, we're going to help you guys out. We're going to, make American uranium great again. I mean, people love that stuff. They eat it up. And your constituency of working blue collar people and small business people are who's going to benefit. They're going to love it because they're going to be the suppliers. Okay. A lot of them screwing around with all this stuff that doesn't matter to the average person. I mean, you could go down in history, but they don't consult with me and they're getting off track a little bit. So anyways, I think this is a big deal. I think this is another inflection point for nuclear power and uranium. It doesn't mean it's just going to launch on Monday, but again, tailwinds that you have are blowing you across the sea to the promised land. I mean, I don't I don't have any apprehension on saying that I'm very, very, very bullish on uranium. It's just that simple. Now, how do you play that? Well, that's the difficult question, right? You can't really go out and buy, you know, uh, Cameco. It's probably overpriced. You can buy one of the ETFs. I've said before, uranium's currently around 80, 81, 82 bucks a pound. I think you can just buy the Sprott trust, just buy the uranium. Is it going to 10 bag from here? No. Could it triple from here? Yes. Okay. Then there'll be other opportunities, I think, here and there around as this construction gets going around suppliers. There's going to be a whole bunch of opportunities, I think, that pop up. And as we see different miners start to emerge that can actually grow, there'll be opportunities there, but you have to pick your spots. Again, there's probably, as I've said before, there's probably over 100 now juniors or companies out there with uranium mining or uranium in their name trying to take advantage of uranium. And, you have to ask yourself how many competent uranium mining teams actually exist? Well, maybe 10. So the other, 10% of the companies are legit and investable, and the rest are, well, it's all hype. So that remains to be seen. That's where the difficulty comes, right? How to manifest a a a vehicles to take part in this. What I think is going to be tremendous. This is going to be multi-year. So, all right, moving on. So this is from Tavi Costa. Commodities versus Fed funds rate going back to 2016. You see that as they raise rates, then things drop off. Cut rates, commodities do well. We're in a rate cutting cycle now. Goes without saying. and commodities are near their all-time highs. Not only is, as I've said before, the consensus view seems to be the world's not growing. We're going to have a worldwide recession. The U.S. is in a recession. The U.S. might be in recession right now. I don't know. We're in a rate cutting cycle. The rest of the world's been cutting rates for 2 years now. This idea that if you look at the IMF's projections, they've actually been increasing their growth projections into next year. So I am the contrarian view. This is what I'm writing about in the November issue of the Actionable Intelligence Alert newsletter, that this rate cutting cycle, this added liquidity is stimulating economic growth. Okay. And I think we're starting to see more and more political change around the world towards more market friendly uh, governments, more economically uh, legit, or shall I say, center right to right wing in their thinking, economic freedom. Look what's happened in South America. You had pushback in Bolivia after 20 years of socialism. Uh, Malay surprised everyone in the parliamentary elections in Argentina last weekend. We're having elections in Chile this month in November. Okay, we have elections coming up in Colombia where Petro looks like he's on his way out. And so we are seeing a shift. You see uh, in Japan, you see around the world, and then the perception is changing in my view, and then you have this impetus of liquidity. I don't know why people are pessimistic. Now, when you look at your individual situation, yes, we are, you know, people could say, well, they're in the wrong industry or they're living in some area where it's depressed. But if you look at the data worldwide, I don't see this decline in uh, economic growth. It's not true. And so uh, this is what we're seeing. I said that as the U.S. was the last major economy to go into its rate cutting cycle, this was going to end up being tremendous. Now, again, we probably are in a recession already. We have issues in our economy. There's structural issues. I don't know exactly what's going to happen, but the U.S. is not the whole world. Over time, the U.S. it's a major player still, but it's becoming less and less. We have 1.4 billion people in India now are entering the per capita GDP is getting to a level around three and a half, $4,000 per year in per capita GDP, where the S curve for energy demand inflects upwards, kind of circa China 2004. Okay, this is why I'm bullish on energy, and it's not just in India. Many countries in the global south and east, Africa, a large proportion of the population of Africa has never flipped a light switch. These things are changing. That's what I'm trying to tell people. It's not, I think the contrarian view is not, a worldwide economic uh, crash or recession. It's just not, I don't see how you have a recession and crash when you have this, everybody's cutting rates around the world. And they've been doing that for 2 years. I've been tracking it and reporting on it. And so I think if I'm correct in my view, and the zeitgeist changes, which commodities are indicating to us, how high does copper go? How is the consensus view wrong on oil? I think it is. And I go into why I think that's wrong in this month's newsletter. I think that you're going to have a blow off top bubble that is way higher than we are at now. And with rates coming down, I just don't see how you have a crash with rates coming down. People say, well, why is the Eurozone stock markets breaking out? Okay. Because they're cutting rates. Liquidity is what drives things in the near term and sentiment. Okay. Yes. Germany's self-immolating itself. Yet the stock market there makes new highs because you're cutting rates. Liquidity matters a lot. Okay. So that's my view. I think that I'm on the right side of this. And I think when everybody catches up, you will see a rotation into a lot of these uh, sectors which are already doing well. You're seeing breakouts all across the resource markets, whether it's copper, nickel, aluminum, things that nobody even talks about are breaking higher. And so that's, I think, a contrarian view that I think will become more mainstream throughout 2026. So another reason why I'm bullish on oil decline rates around the world. This is obviously on the left, the oil producing regions, natural decline and observed decline. Let me explain these two terms. Natural decline, okay, you see in the Middle East is 4.8%. North America, it's 11.2. That's natural decline. That's the decline in production you would get if you did nothing. If you invested no money, drilled no wells, that's just a natural production. Observed decline is what you're seeing even with the current investment that's happening and the wells that are being drilled. So not only, are we in a natural decline, which makes sense because these are extractive industries, and if you don't, they don't last forever. They go through a curve, okay? Hubert's peak, the whole thing. We've talked about this ad nauseum. Even when in the investment that I've been arguing that under investment, the observed decline is still 5.6% a year in the world. This is very important to understand. And so demand's increasing at 1 to 1.5% a year, which is at this point a little bit over 1 million barrels a year. And this is, let's round it up, 6% decline. You need to find 7.5 million barrels of oil a year and bring it online every year to replace just the decline or the decline and the demand growth. So people will say, they say this all the time to me. I'll put out these bullish scenarios and they'll say, well, how come oil is down then? This isn't how commodity markets work. Things work based on perception and liquidity in the short term. I say it over and over and over. Right now, you have a record amount of short positions, okay, in the oil market. People are betting that we're going to have this economic recession in the U.S. and in the world, and the oil price is going to go to 40. The world is oversupplied by OPEC, shale growth. I think these are all, I'm taking contrarian positions to most of these. My arguments are against that these are correct. EV adoption is going to lead to less fuel growth or needs, simply isn't what's happening, observable. And so once the perception changes and the liquidity flows change out of tech into the resource markets, because that's where the profits are. I think the resource stocks are going to do tremendous once capital and interest shifts to them, and then all of a sudden they take off. I just showed you that chart of Cameco. It was already overvalued at 40 or 50 if you wanted to look at it just, from its results. But it launched based on liquidity flows into the stock, based on people imputing their views onto it of what is going to happen. That's the same thing. That's all of a sudden it can change in a heartbeat. So just because you can see the fundamentals and you say, well, I agree with what you're saying about decline and rising. I don't understand why the prices go up, because that's why. When the flows shift, when the views of the market participants shift, then the money will flow in, then it takes off. You just don't know when that's going to happen. Conversely, I could be wrong. Maybe we are going to have a worldwide recession. Maybe EV adoption is going to exceed all expectations. Maybe there's going to be this cornucopia of new oil finds that are going to flood the market. Okay, and oil's going to go to 40 or $30 a barrel. I don't see it. That's well below the cost of production, even in the Permian. If it did do that, it was just going to exacerbate the next move higher. That's how I'm looking at this. So I'm taking the positions now for an inevitable run in oil stocks. I am saying that within the next 3 to 5 years, oil is going to make new all-time real highs. It's going to be, $150, $200 a barrel. And you're going to make multiples of your money uh, on some of these stocks. Now, what's interesting to me is a lot of the stocks that I'm buying, they have repaired their balance sheets. Even at the current oil prices, they're doing share buybacks and dividends are being maintained. Now, are they holding back on final investment decisions? Yes. They're kind of drawing things out. This just makes the problem worse down the line. At some point, price is going to have to go up to incentivize to deal with these decline issues. And this isn't the only problem. Most of the world's oil fields are past their production peak. So this is global oil and gas production by field status. So you look at oil over here on the left, you see the colors. This light blue is most of it, 80% of it's past post peak. This blue is only, this is the ramp up phase. This is like your Guyana's fields that are ramping up and stuff like that. This is a small majority of the global oil and gas production fields. And then this is just the legacy fields that have been around for a long time. So 80% of your oil fields are post peak. And yet demand continues to increase. We have, like I said, just India as an example, reaching the level where oil demand is going to start rocketing higher, kind of where Chinese demand was in 20 per capita in 2004, and we saw what that did and resulted in. So yeah, I'm very bullish over the next several years on oil and gas. Gas is in the same position. So we'll see. But I think this is, again, some people just can't get their head wrapped around, well, if the fundamentals are so positive, why is it the price going up? And that in the short term, if you have all these record short positions and you have a paper market and a physical market. So you have all this oil demand on the water and all this, China is building this huge oil storage, increasing their oil storage capacity up to like 2 million barrels a day. That's why you haven't seen all this cornucopia of oil hit the markets. Look at the stocks, the OECD oil inventories. They're at lows. When is this oil going to hit? Now the Chinese could stop, I guess, buying. This is what the impetus is for overthrowing the government in Venezuela, part of the Donroe Doctrine, to get our hands on that 300 billion barrels of oil that's locked in Venezuela under a ridiculous socialist government. Now, I don't agree with what we're doing, but this is why they're doing it. And even if they get control and put a puppet in there, like this lady that supposedly got the Nobel Peace Prize, whatever, Venezuelan opposition candidate, just another puppet that we'll have installed, then of course, Exxon and Chevron and the rest of these companies will swoop in there and they know what they're doing, but it will still take billions of dollars in a few years to ramp production. But that's heavy oil that can flow right to the Gulf of Mexico, Gulf of USA, whatever, refineries in Louisiana and Texas. That's the kind of crude that they're set up to refine. And what does that do to Canadian crude then? Oops, from the oil sands. So there's a lot of things happening that you have to pay attention to and why they're happening. They're happening for a reason. Having control of 300 billion barrels of oil would certainly suffice to ensure the oil supply for the United States for at least the next 100 years. That's why they're doing it. So oil, this is I saw Josh Young put this up, so I'm uh bogarting it. Oil is historically cheap relative to gold. I think these type of things matter. If you go back and look what happened before, obviously this was the invasion of Ukraine, but you know, you can go back and look in history, and other people have talked about this, oil priced in gold. I think the last time oil got really expensive, it was the oil price gold ratio was like 7 to 1. It's like 50 or 60 to 1 now. I mean, it's just way out of whack. And so gold is overpriced relative to oil. And in the past, when this has happened, we've seen shifts where the oil price rallies relative to the gold price. So a lot of things, again, I can sit here and go cherry pick anything and say this is, because I'm biased to higher oil prices because I have investments in oil stocks and I can find data, and somebody that's bearish can go find data too. You're going to have to do your own analysis and think about, what's really happening. Ultimately, it comes down to your conviction, your research. This is why it's difficult to make money in these markets. Can't just rely on what I say or somebody else says. I can make an argument and show you why I think this is going to happen, but it doesn't necessarily mean it's going to happen. But the way I've set it up in the portfolio, it doesn't matter because even 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 at current oil prices, the companies that I have in my portfolio, I believe are going to give me a return that's going to be sufficient to at least match or exceed the S&P over the next 5 or 10 years. And if I think oil goes where I think it's going to go, then we're going to have asymmetric returns. So that's kind of, I win a lot, tails I don't lose, or I make, market-based market returns. That's kind of how I'm looking at it. And I can adjust on the fly. This is what I do. Somebody asked me a question about this, and again, I answer these questions in this newsletter that I'm putting out this weekend. Well, how do you do this? So I said, well, I take initial positions sometimes when I get an idea in my head, and as I build conviction, I will add to it. So initially, maybe I'll take a 0.5% or a percent position in an industry or a particular stock. And then as I build conviction, I might take it to 2 or 3%. And if it starts to work, then I'll start layering on because if I realize I'm in a bull market, then I'll layer on and it could get, even bigger. That's what I did in uranium. Once it was obvious to me what was happening, I layered on heavy. Now, I've subsequently sold most of those junior positions. Okay. We have a few positions now, but that's how I do it. And then there's other strategies you can do on the way up, selling cash covered puts, all kinds of other stuff. So, but that's kind of how I do it. And that's how I'm kind of looking at oil right now. I kind of, the oil service stock. So if you listen to the service providers, a lot of the earnings that came out for especially the portfolio constituents of the AIA portfolio, they have, they're doing great. Okay, because the industry shrunk so much that even the capital that's being spent on current projects is sufficient to drive growth in these companies. And so, can you imagine when real money comes back into this, once the price goes up, it's just going to be tremendous. I mean, I have companies that are buying, hundreds of millions of dollars worth of stock every year back because they have so much cash coming in and they're in the, oil services business. If you look at just even what the drillers said the last week, Valaris Transocean came out. You have to be positive. They're getting more and more positive. They're cash flowing now, and they see 26, 27. A lot of these projects moving forward, and you have less and less equipment and less people to deliver these results. So I think there's a lot of opportunity, and it's in the S&P historically. I think currently oil or energy in the S&P represents about 2.5% of the S&P, when historically it's like 11 or 12%. And at peaks of the oil price, when the oil price takes up, it's gotten as high as 30% of the S&P. So we are in a industry that is out of favor. And that's what we have to be buying. We don't buy what everybody else is buying here. So copper, the supply shocks, we've talked about it. I'm bullish on copper, Grasberg, the mine in DRC that flooded, Cobre Panama mine that was shut down by the Panamanian government. You know, that alone, those three mines were about 9 or 10% of world copper supply, notwithstanding the fact that there's production issues at Codelco in Chile, which is the largest copper producer in the world. They're having problems and struggling to raise production or keep production steady. So yes, this is Morgan Stanley forecasting deficits going forward. Um, because of Morgan Stanley expects the biggest deficit in 22 years next year. This is why copper's over $5 a pound. Of course, we have positions in the dividend portfolio and in the Actionable Intelligence Alert portfolio that will take advantage of this. So I want to close out here. We're on the verge of electing a Democratic socialist to the mayorship of New York City, the ostensibly the financial capital of the world, at least of the Western world. And the education system and the lack of history, I just want to remind people, obviously people here skew away from that for the most part, I think. But this is GDP per capita from 1931 to 2022. And it shows Poland in the blue, or light blue, and Venezuela in I don't know what the color is, let's call it red. And you see that from the 30s to about 1980, Venezuela, because of its oil wealth, look what happened. Per capita GDP grew from about $4,500, $3,000 up to over $15,000 per capita. And then, like all South American countries, it started to kind of stagnate because of the introduction of, anti-market philosophy, culminating with the election of Hugo Chavez and the introduction of Bolivarian socialism, Chavismo, and subsequent the bus driver Maduro. And you see what has happened. It's collapsed. So you have a country that has the largest oil endowment in the world, and yet the per capita GDP has collapsed by 2/3, 75%. So policy does matter. Conversely, you have Poland, which was part of the Warsaw Pact, which was a communist country after World War II. Obviously, it suffered, through the war. It doesn't really show any kind of growth. After the war, it was absorbed into the Eastern Bloc, slowly made progress over time, rebuilding, nothing really great, basically doubled per capita GDP over about 40 years. Then we had the kind of stagnation in the, end of the Soviet era, late 70s, decade of the 80s, the stagnation, and then the subsequent, perestroika and the fall of the wall and the Iron Curtain, and then the introduction of pro-market uh, economic, laws and regulations. And you see what happens. Per capita GDP went from under 10,000 to over 30,000 basically in one generation. And so you can do this exercise over and over and over. And because of our education system, because people don't learn from history, history does repeat, although the rhyme changes. As Milton Friedman said, is without a doubt the best way to bring the most people out of poverty is through free markets and, uh, capitalism. It's just the record is clear. It is unequivocal. You cannot argue it. Does that mean every single person benefits? No, because in a free society and free markets, people are not equal. Okay? Some people are lazy. Some people become alcoholics. Some people are not that smart. Some people are not driven. It just depends. But overall, if you create a fertile environment for economic growth, it will happen for the most people. If you don't create that, if you take freedom away, if you institute social policies, if you try to live off your neighbor, if the majority of people want something for nothing, you get Venezuela, even though it's probably endowed with the biggest oil reserves in the world. And so people should take this into consideration, but they won't, because history repeats. First is tragedy and then is farce. And people don't learn. And so this is just one example. Yes, I understand that we don't live in a true capital free market society. It's a hybrid society, socialism and free markets. Okay. We have a lot of problems. We have a lot of oligarchies. These things need to be dealt with. I agree. Okay. But to just shift to democratic socialism, I think it's going to be an excellent. I don't think the city's going to collapse. They had Bill de Blasio in there. He was singing from the same score sheet. This guy, you have to understand something. Let me just say this and I'll end the video. This guy's never done anything. Okay, he's a rapper. He was a state legislator, I think. You're running the largest city budget in the world. I think it's $100 billion a year with so many departments, so many embedded factions, people with their own borough presidents and different councils everywhere. These people all have their own agendas, which is to steal as much money and get as much advantage as possible. Do you actually think this bank is going to be able to implement half the stuff he's talking about? That's not how these things work. This is a huge bureaucracy that will be there long after Mr. Mamdani's long gone. Okay. He might be able to do some things here, there at the margin. But again, it'll be Bill de Blasio 2.0. You're going to pay more taxes and get less services and have more crime. That's basically what you're going to get. So we'll see. I think it'll be interesting to watch. I don't live there. I wouldn't live there. I'm not going to be taxed to death, and I don't want to have to look over my shoulder. I'm at the age now where I can still defend myself, but I would rather not do that as it becomes harder and harder to recover. And if I was injured in some kind of fight or mugging, it would be hard for me to recover. And in Texas, you can just shoot the person that's attacking you. Can't do that in New York City. So this is how things are. We'll see. But again, the record is clear throughout history. Okay, guys, Actionable Intelligence Alert on Substack. This is where you can subscribe to the newsletter, understand how I'm taking advantage of the things that I talk about in these weekly videos. We have the free newsletter I put out, which talks more in general, more in depth, where I curate podcasts, articles, videos, what have you, reports about the things that we're talking about here. You might find that interesting. I actually give some commentary in there occasionally, long form. That's available to you also. I appreciate the viewership, and we'll talk to you next week.